Well, hello everyone, and welcome to the ADSS podcast. It's been an interesting week with plenty of volatility. And for that, I'm happy to host my friend and colleague, Neal Keane, the head of sales trading. Hey, Neal, how are you today?
Hi, Mahmoud. How are you?
I'm pretty good, thank you very much. So my question to you, what happened on Tuesday? Why did the market sell off?
So we had an aggressive sell-off on Tuesday. A lot of questions on the desk as to the reasons why. It appears that there's no obvious catalyst as to why we had this sudden pullback. I would say there's a few factors at play here. Number one, seasonality.
Right.
September has been widely reported in recent days that September is the weakest month for stocks. I think that's definitely a factor. We were overdue a pullback, a correction, some profit taking. We had a bit of a sell-off early August after the last non-farm payrolls release and Bank of Japan surprise, but we've essentially recovered all of those losses.
Okay. And I think very quickly.
Very quickly, yes. Indeed. So I think that's also another thing. Last week, all the attention was on Nvidia's earnings. Ultimately, they underwhelmed, disappointed. A lot of the talk this year has been Nvidia's driving most of the stock market gains higher. With that now in question, again, it's more selling pressure, and I think that's what we've seen. On Tuesday, we did see Nvidia down another 10%, for example.
So talking about Nvidia, I mean, the report from Nvidia was positive, but the market reaction was slightly negative. So what happened here?
Well, I think, yes, the expectations were massive. The gains in the stock market year to date, the last couple of years, are also excessive, you could say. And I think, it gets harder and harder to deliver on expectations. Ultimately, this was a case of buy the rumor, sell the fact. The demand outlook underwhelmed and disappointed investors, and we've seen the reaction since.
Okay. And let's stay in what's happening this week. On Friday, the market's waiting for a very important risk event, which is the US NFP payroll job markets also. So my question to you is, why all of this hype about this report?
Well, non-farm payrolls was always a massively important economic release. I would say there's more emphasis on it now, given that CPI inflation has come in line. So that was the primary focus for the Fed in recent years. That's now come in line towards their 2% target. The latest focus really for markets is a cooling in the jobs market. We saw the reaction last month was aggressive.
Okay.
And I think even now with recent market action, there's massive expectation towards this Friday's release.
So the market wants to be sure about the health of the US economy, because in terms, we've seen that the US inflation started to stabilize. So right now, investors want to make sure that the job market also in a good health.
Well, at Jackson Hole, Fed Chair Powell announced they're ready to start cutting rates.
Right.
That's clear. That's happening one way or the other. What this Friday's payrolls will decide ultimately is the extent of the cut. Will it be 25 basis points? Will it be 50?
Okay.
If we have a very weak number, it's likely it will be 50.
Right.
As it stands, the odds of a 50 cut are around 45%. So it's already towards a coin toss in terms of a decision, according to the markets at least. So this is why I think we will see additional emphasis on Friday's number, and I think additional volatility too. We will likely see an aggressive reaction one way or the other.
So talking about the Fed rate cuts, expected rate cuts, the market has priced in already 100 basis points this year. And we still have only 3 meetings remaining. So in a certain one of those, there has to be 50 basis point rate cut. Is that right?
Well, I'm not sure I would agree that there has to be. We've seen markets get interest rate expectations wrong over the course of the last 2 years. And I think it all depends on the data. Yes, this is the current consensus, but if we were to have a surprise CPI, for example, next week, it can massively impact expectations for the coming months and next year, 2025.
Yeah.
I think the simple takeaway here is rate cuts are about to commence, and you can expect rate cuts from every meeting from September, November, December into 2025.
We could get more data also from the Fed dot plot. It's going to be released also in September.
That will also help, yes.
Okay. And also I wanted to ask you about the US dollar and gold, because plenty of questions we receive about them. So what do you think about the US dollar at start, where the US dollar is heading to?
Yeah, well, as the expectation is for a slew of rate cuts from the Fed, we've seen a period of dollar weakness in recent weeks. We've seen euro dollar touch 112 briefly last week.
Yeah.
I think we're seeing that in most major currency pairs where the dollar has been weak.
Yes.
And I think we can expect that to continue going forward based on current expectations.
Right. And what about the metal, the precious metal, gold?
Yeah, gold. I mean, gold traded an all-time high recently, above 2,500. Since then, it seems to have ran out of steam a little bit. We've seen in recent sessions it's dipped below 2,500. Yesterday, we traded a new low, 2,471. So I wouldn't be surprised if we pull back further in gold too. But again, it depends on the upcoming data, and that's going to have a huge impact going forward.
Indeed. I just wanted also let's move to the other side of the ocean. Let's talk about Europe. In the next week, we are waiting for the ECB meeting to take place on Thursday. So what is the market expectations from this meeting?
Yeah, I mean, I think the consensus is for another cut from the ECB. They've already cut once already. Another 25 basis point cut is what the market expects. I think Christine Lagarde, head of the ECB, has signaled that, and I don't see any surprise there. I mean, despite the rate cuts and weakening data, Europe or Eurozone inflation has dropped towards 2%, their target. We saw before the sell-off on Tuesday, the German DAX traded an all-time high. So all looks okay and very stable and predictable in Europe so far.
Okay, so since the CPI in Europe is around 2.2%, so that's going to allow the first rate cut in September. What about October? Do you think that we're going to have another rate cut in October?
In terms of the ECB?
Correct.
Well, they've already cut once already. They're likely to cut next week. And I think the line or the script that the ECB tend to stick to is we'll take it on a meeting-by-meeting basis.
Yes.
Despite that, yes.
Data dependent.
I would expect them to continue cutting rates, yes.
Indeed. And there's another issue I wanted to touch base with you on, which is the US elections. So in the next week, on Tuesday, the whole world is waiting for the TV debate. It's going to take place between Kamala Harris and Donald Trump, the two nominees for the US presidency. So why all of this hype about this event?
Well, this is the first declared debate between the two candidates, and possibly the only debate they're going to have ahead of November's election. As of now, you could say the election is too tight to call. Odds makers have Trump slightly ahead. Some of the polls have Kamala Harris ahead. So it's extremely tight. Gone are the days where Trump was presumed to win this very easily against Joe Biden. Now that he has been removed, it's back to square one in a sense. And I think the debate next week is going to tell us a lot. It may sway voters. It may sway the election itself.
So it could be a deal maker for some voters.
It looks likely that that's going to be the case, yeah.
Right. And that takes me to the following step, which is, what if Kamala Harris won? What if Trump won? What is the market reaction in each scenario?
Well, remember, Kamala Harris is already in power. So were she to win, you could, and markets may expect business as usual, barring a few minor tweaks. With Trump, it's a different story. He's already talked about tariffs. He's talked about protectionist policies. He's talked about clamping down on immigration. All in all, market-wise, that could be interpreted as inflationary. Either way, with Trump, it's unpredictable. We're likely to see more volatility. We've seen in his previous term from 2016, erratic off-the-cuff announcements, tweets, and, we got significant market moves on the back of that. And I think you could expect that again, were he to be victorious in November.
Indeed. So let's just say that the Trump's policy with the rate cuts that he is suggesting, with the anti-immigration policy that he's going to take, there's too many inflationary policy in this case. So would that be positive for the US dollar more than gold, or vice versa, do you think?
Well, inflation will not be helpful in terms of what the Fed is trying to do. And were that to be the case, and the Fed are impacted in their ability to cut rates, yes, you could expect some dollar strength there. But I think all of this is difficult to forecast months in advance. Will he actually implement the policies as he's promised? Hard to say.
Right.
I would hold back on making too much of a conviction view on what markets would do with Trump in power.
Right. So I just wanted also to ask you what kind of event we have to watch the space for in this month specifically.
So as we've discussed, all eyes on payrolls initially. I think if ADS clients look to the ADS Insights terminal, you'll see a full economic calendar for all major events ahead, such as the ECB next week, as we've already said, US CPI next week.
Correct.
Most importantly of all, we have the Fed decision September 18th. And the key decision there, or what we're all waiting for, is will it be 25, will it be 50?
Right. So we are waiting for very important data, rate cuts, central bank decision. So it's going to be very important and volatile month, could be.
It's going to be a very interesting month. And yes, I think we can safely assume we're going to see an uptick in volatility going forward.
So the final question with me was, what kind of question you receive on the ADSS trading desk from the ADSS clients?
We've had a lot of questions this week on Tuesday's sell-off, for example, Nvidia's earnings from last week and the impact on the stock market going forward. Again, seasonality. A lot of people have been asking about, weakness in stocks for September and what we can expect going forward. Gold, we've made a new all-time high. Can we expect to make new highs following payrolls and the other data we've already mentioned? So just general market updates. We've had a lot of them this week, and that tends to happen when we have increased bouts of volatility as we've seen, and long may it continue.
Well, thank you very much for joining me today, and I'm looking forward to hosting you again in the ADSS podcast.
Yeah.
Well, that's all for today. Don't miss out our next episode where we'll discuss the latest market development. Be sure to subscribe and follow us on social media. If you have any question, please share them with us at ts@adss.com.